Welcome to The Explainer. So picture this. It's early 2026. The world feels like it's on a knife's edge, and investors are scrambling, desperately looking for somewhere safe to put their money. Today, we're going to decode that chaos.
And honestly, this quote from back then just says it all. In March of 2026, a tidal wave of pure, unadulterated chaos slammed into the markets. Volatility was the only thing you could count on, and traders, well, they were just trying to keep their heads above water as everything from old-school commodities to crypto went on an absolutely insane ride. Okay, so here's how we're going to break this all down. First, we'll look at the geopolitical spark that lit the whole fuse. Then, we'll follow the money into gold's classic safe harbor. After that, we'll dive into crypto's much wilder reaction. We'll also try to untangle the really confusing story of XRP, and then wrap it all up with a massive dilemma facing every single trader at the time. Right, first things first, we have to understand the trigger for all of this. This wasn't just some random Tuesday in the markets. Nope. This was a perfect storm of global conflict that kicked off in March 2026, and it put the entire global economy on high alert. So, what was going on? Well, we had escalating U.S.-Israel strikes in Iran happening at the same time as the relentless war in Ukraine. And these weren't just separate news stories. They combined to create this massive wave of uncertainty that just washed over everyone, from the biggest institutions down to the smallest retail investor. And where did this uncertainty hit first? Bam. Energy. Oil prices didn't just creep up, they absolutely exploded past key resistance levels. Seeing Brent crude below past $82 a barrel like that was a major red flag for the entire global economic system. And the reason why is so critical. The Strait of Hormuz, think of it as a vital artery that carries about a fifth of the entire world's oil supply, was getting choked off. This wasn't just a number on a screen. It was a physical threat to the energy that, powers pretty much everything. So when you're faced with that level of chaos, that kind of fundamental threat, where do you run for cover? Well, investors ran to the oldest, most trusted playbook there is. They ran to gold. And what's so telling when you look at this timeline is that this wasn't just some flash-in-the-pan panic buy. Not at all. This was a powerful, sustained rally that had been building steam since 2025, and it all culminated in March 2026, when gold smashed through to a new all-time high of almost $5,300 an ounce. Just incredible. So what was the engine behind this? It was really a few massive forces working together. You had central banks around the world buying gold by the literal ton. You had a classic flight to safety as investors dumped riskier assets. And then you had big players like JP Morgan raising their price targets, which just poured more fuel on the fire. All right, so that's the old guard. Now let's jump over to the digital frontier, because crypto's response to all this paints a much, much more complicated and maybe more interesting picture. You see, while gold was on this steady, predictable climb, Bitcoin's reaction was, well, it was chaotic. It actually took a big, sharp dip when the war news first broke. But then it staged this ferocious recovery, rocketing back over $71,000. And this just sparked this massive debate. Which one is the real safe haven? The proven history of gold or the new digital potential of Bitcoin? But then, out of this chaos, something really fascinating started to gain traction. A hybrid. Tokenized gold, specifically PAXG. So what is it? It's basically a crypto token that lives on the blockchain, but each token is backed one-to-one by actual physical gold sitting in a secure vault. It's an attempt to build a bridge between these two very different worlds. And traders went for it. Big time. We could see from the on-chain data that daily trading volumes for tokenized gold just exploded, surging past $1 billion a day. And why not? It promised the best of both worlds. The trusted stability of gold, but with the 24/7 borderless trading you can only get with crypto. For many, it was the perfect hedge in a moment of crisis. Okay, but while that whole gold versus Bitcoin versus tokenized gold battle was raging, there was a completely different and frankly really confusing story playing out for one of crypto's biggest names, XRP. Yeah, because as the calendar flipped to April, while almost every other asset was reacting to these huge global events, XRP seemed to be stuck in its own little bearish bubble. It was trending down, and it left a lot of investors just scratching their heads, asking what is going on here. And if you look under the hood at the technicals from mid-April, you can see why. The picture was pretty bleak. The relative strength index, the RSI, was wallowing below 50, which just signals really weak momentum. And even though a couple of indicators hinted it might be oversold, the big picture summary from the charts was a clear, strong sell. And the price chart told the exact same story. XRP was basically trapped. It kept trying and failing to break through the ceiling of resistance around $1.53. And at the same time, the floor of support underneath it, down at $1.22, was getting weaker and weaker. Not a good look. But this chart, this really drives the point home. This shows open interest. You can think of that as the total amount of money betting on XRP's future price. And look at that collapse. It cratered from a peak of over $10 billion down to just $3.8 billion. That is a massive exodus of money and conviction from the market. So here's the riddle, the central conflict with XRP at the time. You had this massive tug of war. On one hand, the short-term picture looked terrible. Weak technicals, falling volume, the works. But on the other hand, the long-term story was wildly bullish, with some analysts calling for prices up to $950 based on things like better regulatory clarity and growing adoption. It was a coin with two completely different faces. And all of this brings us to the final, crucial takeaway. In the middle of the chaotic market of 2026, there just was no single easy answer. There was no simple right move. Every asset we've talked about represented a totally different bet. You had gold, the slow and steady, old reliable. You had Bitcoin, the high-octane, volatile digital gold. You had PXG, the new kid on the block trying to be a hybrid. And then you had XRP, this high-risk, high-reward wild card with a deeply conflicted identity. It was a full spectrum of risk. Which leaves us with a huge question, one that's even more relevant today. As the old world of traditional finance keeps crashing into the new world of digital assets, what does a safe haven even mean anymore? And more importantly, as this collision continues, where will the truly smart money turn next?